Welcome back. Robert Towell from Sasfin Securities joins me now for more detail on that market action. Thank you so much for your time, Rob. A lot of sourness in the markets across the board today, and I'm not sure if I can really pinpoint it to the disappointment that investors have had with Meta and Microsoft. Quite interesting because it seemed that the optimism that investors got from the Alphabet results this week just failed to keep them in a positive territory. What do you make of what we saw today?
I think on the big IT cap shares and the mega cap shares, they're such huge companies and they're generating so much revenue and profits. I think people underestimate what a huge business they are. When you trade in market caps of $1 trillion and your revenues are up in the 20% and it's not good enough, I think people must maybe take a look at it and think, is this something that I want to own for the next 10 years? And Microsoft and Meta are both excellent companies, and any weakness here I would take as opportunity to buy into them. They're really massive businesses and difficult to run, and they're really producing really good numbers. So I do think that's put a slight weakener on the tech as a whole. But there's intermittently, if I look today, some of the shares are up 15, 20%, some of the tech shares, while others are down 15 and 20%. So just slight misses at this stage are causing great moves in the share price. And I think it's also a little bit to do with the elections next week. People are taking profit out when they see a weaker number, and they're taking money and putting money in cash while they wait for those US elections. So you're starting to see big swings, and you'll probably see it into the next week as well as US elections pan out next week. So I think a little bit of profit taking coming out of that big tech section, and you're seeing that impact the rest of the market as well.
And talking about misses, for the third quarter, AB and Bev seem to miss on forecast there. They did post a growth in revenue, a climb in core profit, but the volume slowed there 2.4%. I'm actually quite surprised because that share has been down over 6%, and I'm quite surprised that the share buyback did not smooth any of that nervousness.
I think they've still got quite a large debt amount, which they're trying to bring down. And I think, every time they miss their earnings slightly, the amount of debt that comes off their balance sheet is not as large as people want. And then just generally that whole sector, in the beer sector, they've actually outperformed their peers, Heineken, etc. But still, it's just they're not getting the growth that they used to get out of the beer market. So it's more of a mature business now, and they're not managing to get rid of the debt at the pace that people want. So I think the interest rate cuts, if they carry on and they are more aggressive, will definitely help a business like AMB and Bev. But you've seen the talk now with Trump coming in, possibly that rates might stay higher for longer because of inflation. So it will be very interesting to see. But I think there's just not the same growth in old brewer like AMB Bev that there is in the tech side. So I think longer term you'd rather be in a growth industry rather than a mature business.
Well, a company that is still in its kind of, I guess, infancy stage, not seeing growth, is Renogen. We did obviously see revenue up by more than 7%, but that loss widening by 53%. We did see that share giving up 4% at some point as well. Is Renogen just unable to dig itself out of loss-making territory, at least in the medium term?
Yeah, they've had a few engineering issues with their plant, and that plant is the first plant of two plants that they want to build. So it's producing helium, and helium is an excellent asset to have, but it's not producing at the rate that they wanted to. So they keep getting losses there and having to switch off the plant, get engineers back to fix it up. So they have slowly started to get that plant up and running. But the real issue is that on an industrial scale, to produce helium for the whole of South Africa and maybe for export as well, they're going to need the second plant. So even if they get this plant right, there's still going to be large capex going forward. So there's still a long road for Renogen, and they really need to start making profits in the smaller plant to allow them to build the second plant.
All right. Well, let's get into fishing, and that is Oceana. They came out with a voluntary year-end trading statement there. Of course, there's less than a 20% difference in the numbers between this year and the prior comparative period. But they did say that the HEPS should increase, but the EPS should decrease. What did you make of that mostly colorless trading update?
Yeah, so they've been recovering over the last few years, and they've got a really good business overseas. And as inflation went up in the last year and a half prior to now, You saw that people moved to fish meal, and fish meal is one of their biggest businesses in the US. So they got really good returns out of that. But as inflation starts to come down, you start to see people going back to their normal staples rather than the fish meal, etc. So there's been a weakening there. And then the rand's been stronger initially, at least in the first half of this year after elections. You've seen a stronger rand, which also impacts the offshore earnings. But generally, the business is running well. It's a good business, well run. You got a bit of a rand hedge from their overseas businesses, so it's something you could look to own in our sector, and you get dividends from them, and you should get growth going forward as well. So a fair set of numbers from Oceana.
All right. Well, let's get into your stock pick today, Rob. What are you choosing?
Well, the market's down 1.5%. Not the best day to have a stock pick, but looking overseas, we like Next Era Energy. They produce their ESCOM, except they don't produce coal-based electricity. They do solar, wind, and gas on the eastern seaboard of the United States. And as interest rates come down and people move to cleaner energy, we see that as a great utility to own going forward. It pays really good dividends and will have growth as that sector grows. So we think it's a really good long-term investment, and that's Next Era Energy.
All right. Well, thank you so much for your time, Rob. Appreciate it. That was Sasfin Securities' Robert Towell.